Going on? Ron Sneller here, registered financial consultant and founder of Sneller Financial Services. Welcome to another edition of Wealthy and Wise Wednesdays. We have some important information to talk about. And so when I'm done with this discussion, you're done listening, please do me a favor. I want to know your thoughts. Please comment below because it's really important what we're going to be discussing today. All right. So I don't know if you guys saw, but yesterday, the U.S. government just hit a milestone, another milestone, and not a good one. $31 trillion in government debt. And that's a problem in and of itself. But when you look at our current interest rate environment, it's even more of a problem because those higher interest rates are now going to be applied to the government's debt. And quite frankly, the government can't afford that. That's part of the reason that they've kept interest rates so low for so long was because of their own debt situation, their own debt load, okay? And so what's going to end up happening is the government is going to significantly increase taxation. And what that means for you as far as your financial life and as far as your financial future is these rising taxes over time, it's going to be a huge threat to your retirement lifestyle because all Americans have been told that what you ought to do is max out your pre-tax retirement accounts like your 401k's and your IRAs. And you've been told the reason that that's smart is you're going to take a tax deduction right now. And then when you retire, you're going to be in a lower income tax bracket. But here's the thing, you guys, there's no magical age where taxes or tax rates all of a sudden go down. When they tell you that you're going to be in a lower bracket when you retire, they're saying it's because you're going to be living on much less income. Now, as an aside, I've never had a client come to me and say, Ron, I want to hire you and I want to enlist your help. I want you to help me retire on much less income than what I'm making right now. Okay? That's not what they say. They want me to help them to maintain their standard of living. But the problem with this thinking is that the entire tax structure is likely to be much higher in the future. We've got $31 trillion of government debt with interest rates rising. Social Security is broke. Medicare is broke. There's even states and cities that are on the brink of insolvency. So probably even state income taxes and local income taxes are probably going to be on the rise. I mean, there's state pension plans that are on the verge of bankruptcy. You look what Europe just did, turning back on the printing presses and buying bonds because their pension systems were about to collapse. And I fear that we're in for something like that here as well. And so I tell you, anybody who is willing to listen and who kind of realizes that the advice that's given and perpetuated to the masses, it's really designed to serve the system. The financial matrix is what I like to call it. The advice that you're given is designed to profit Wall Street and the banks and the IRS much more than it's ever going to benefit you. Okay? They've tricked you into taking a tax deduction on the tiny little seed money that goes in every year into your 401k. And what are you doing for them? You're growing a huge pile of money that's never been taxed before. And so then instead of being able to go after the seed and tax the seed, they're able to go after the harvest after you've grown it for them and probably at much higher tax rates. Now you got to think about something. Everybody bitches and complains about taxes. I know I do. But where we're sitting right now is we're sitting in a historically low income tax environment. If you go back to the year 1980, the year that I was born, in the 80s, the top three tax brackets were 50%, 60%, and 70%. Today, those top three tax brackets are 28, 32, and 37. And most people aren't in those upper income tax brackets. So for the average middle class or upper middle class American, they might be taking a tax deduction on an effective 15% bracket, maybe 20% effective bracket. And then when they go to pull the money out of the 401k 25 years from now, if you've done a good job saving and investing and you've built up a good pile of money, you took a deduction at 20, maybe you're paying 30 or 35% later on when that money comes out. So you guys, that's a huge, huge problem. We have got to change the way that we think about financial planning. One of the things that you can do is, I obviously recommend taking the match on your 401k if your employer offers you a good match. Take the match, right? That match does have to go pre-tax. And so it's going to get taxed when it comes out later on, but that's okay. It's free money. But what I would highly recommend is for whatever money that you're okay with positioning for retirement, for long term, and that you don't mind having at risk in the stock market, I would highly look at utilizing Roth accounts. Consider doing that, okay? And I do help people out with that on the advisory side of what I do. So if you don't have a Roth IRA, please contact me. Let me know. That could be something that could potentially be a huge boost to your future by having tax-free money for retirement. But here at Sneller Financial, we are huge fans of utilizing overfunded cash value life insurance policies for a few reasons. Number one, when the money goes in, as long as you're working with me, we've got it set up properly and structured properly. Once that money goes in, you're never going to pay income tax ever again. The money grows tax-free. You can access it tax-free. The retirement income is tax-free. And then when you die, you're creating generational wealth that you're leaving to your family tax-free as well. So we're a huge fan of those. And the other thing is with the cash value life insurance, as you're building equity within your program, that money's not locked up until 59 and a half years old like a Roth IRA or like a 401k. We show you how you're able to use your policy as a banking alternative to be able to borrow against your policy and purchase a vehicle, for example. And then instead of making payments to the bank, you make those payments back to your own personal economy so you can recycle and recapture all of that money and all of that interest that you used to transfer out of your personal economy. We've used these policies to pay for my daughter's kindergarten tuition, to buy a car, to put up a fence in the backyard, to replace a roof on a rental property, all this year, just through our cash value life insurance, because we've been doing it for a while. We've built up significant equity, and now it's become our own private family bank. So if you're interested in learning how to do that, let me know. Because what I share with clients is that it's like you're funding your own personal pension program, because there's no stock market risk. It protects you from market volatility. So when you retire, you're able to kick off just consistent, safe, tax-free cash flow. But while you're building the equity in this personalized pension over time, you're able to access it to take back control of the banking function in your life, eliminate banks, and recycle and recapture that money. So that's huge, you guys. That's huge. And also, obviously, it's life insurance. So it does protect your family during your working years. And then later on, during your retirement years, when the good Lord calls you home, that life insurance benefit pays out tax-free as well. So you guys, if you're concerned about this problem, the government debt, the high interest rates, all of the market volatility, I mean, the stock market's down 20 or 25% this year, please do me a favor, like this video, number one, leave me a comment below with your thoughts, and share this out there so more people can learn about this and understand what is about to happen to them and how it's going to impact their financial future. And you guys, listen, I can help as a holistic, independent advisor. I have strategies that can grow your money where we can protect it from this increased taxation, as well as keep it safe from all this market volatility if you don't want to take on risk with that money. So if you do want to meet with me, I offer complimentary consultations. All you got to do is just send me a message here on Facebook, or I even put my calendar app in the description. So if you look above there, you'll be able to find my calendar app. You're just able to pick the day and time that works best for you, and the app will automatically send you the Zoom link for our consultation. So you guys, I really appreciate you taking the time to listen. Thank you for engaging with me here on social media. Please share this message out there, again, so more people understand the ramifications and the impact of what's happening right now with the debt, with the interest rates, and with the taxes, and how that's going to impact you in your financial future. All right, guys, thanks. Take care.